For Regias Kokoris, 50,000 Ugandan shillings, almost $30, was enough to change her whole life.
I started with 500,000. I bought a pig, then 100,000. I bought another pig. That from there, I expanded 200, 300 and something, up to now where I am.
3 years ago, she owned 2 cows. Today, with the help of a loan from the Uganda Microfinance Union, or UMU, she supports a family of 8 on the income from this farm.
I'm happy, I'm okay, because I can buy whatever I feel I want.
Charles Nayali and Rodney Schuster conceived of UMU in 1996 as master's students at Brandeis University. Using initial funding from the Bank of Uganda and USAID, they opened their doors a year later with a mission: to reach the people commercial banks weren't serving.
I think there is another misconception that the poor people do not pay. So the banks find it rather unreasonable to go and bank with unbankable people, as they say. But we have seen that that is not true.
UMU has 12 branches around the country, like this one in Kasangati, about 9 miles away from the capital. For most of the people in this town, microfinance organizations have offered them the first access they've ever had to formal financial services.
I think we are really changing the lives of people. One way is by increasing their household incomes. They can now access certain things, like their children can now go to school or even better schools. They can have better meals. They have better accommodation. And generally, life becomes a lot easier when your income raises.
With an average loan size of $100, UMU is helping micro-entrepreneurs, people who sell vegetables, have small stores, make clothing, and run the other small businesses that make up the backbone of developing economies. While larger banks may balk at lending such small amounts, UMU boasts repayment rates that would be the envy of traditional institutions.
We have a 98% repayment record on time and a 100% historical repayment record.
Microfinance institutions have been criticized for their high interest rates. UMU charges nearly 4% a month, but according to Schuster, that's the price of staying in business.
It essentially costs the same to process and administer a $30 loan as a $5,000 loan. So our costs are much higher.
They try to minimize some of those costs by spreading the risk.
What we do is we make people form small groups of about 5 people, from 5 to 10, and they guarantee each other. They act as guarantors, essentially. It's quite a simple concept. So one borrows. If that person doesn't pay, no one in the group can then borrow. So the other 4 people then put pressure on the first borrower, who's not paying their loan, to pay. And that's really how it works, basically social pressure.
The Ugandan government has taken note. Within the next few months, the parliament is expected to pass a bill allowing microfinance organizations to become regulated financial institutions and expand their scope of services.
I think the Bank of Uganda really sees MFIs as a solution to reaching a broader number of people, really providing services on a much broader basis to micro-entrepreneurs throughout the country.
Micro-entrepreneurs like Regias Kokoris, who have shown that a little can go a long way.